Sorry, guys. Once again, I want to apologize for bringing this a bit late. I have been involved a lot of chat work. Okay, so let's start. Basically, like I said, my name is Rocco Gosobugwe. I have been on the journey of Forex for since 2013, and I have learned a lot that could be of use to upcoming trader. The prospect is there is something that is worth a career that is worth taking up. It shouldn't be an hobby, though you might start like an hobby, but with time it should be something that you should take up seriously. I plan to build great wealth. I use Forex as a tool for wealth creation and also reaching out to the youth. So the first few weeks to few months, we're going to use that to build the knowledge that you need. One thing I must say is that if you want to be a forex trader, you have to be passionate, you have to be disciplined, you have to be patient, and then you need a lot of confidence in yourself. So this is the first basic class, okay? And introduction to forex, like I said, that forex simply means the exchange of one country's currency for another. It's also a means of buying into the economy of the country. Actually, when you are trading forex, you are actually buying a share into a country because the currency represents the or reflects rather the health of a particular country. So when you hear the word forex, it simply mean foreign exchange. FS, sorry, for short. It's a global market that allows the trading of different currency of the world in simple term. Like I said, it reflects the health of the economy of a particular country. It is the largest financial market in the entire world with a daily volume of $6.6 trillion. That's a lot. That's a lot. That's a lot, and is quite larger than any other financial markets. In fact, it's larger than the New York Stock Exchange combined with the cryptocurrency market, which seems to be growing very fast. So, and essentially, it's open 2-4-5, meaning that it's open from Monday to Friday, closed during the weekend. So 247, it moves from one location to another. Like we have the London section, the New York section, and the Asian section. During the London section, we have more of the European country more active. During the New York section, we have more of the more active the American country section, and then during the Asia, more of the Asian section, Asia country are more active. So the commodity, the security, or the pair that are traded have different volatility during this section. But what is important is that forex is traded 247. 247. Now, what is traded in forex? Simply put, money. Money is what we buy and sell in forex. Now, if you look at the situation of Nigeria, we are in a dilemma, and basically the Ministry of Finance and Central Bank of Nigeria is trying to do everything that they can to stabilize the economy, because our naira is telling us that our economy is in a fall, and is falling, and the economy is so bad, so to say. So it's falling, and then they're trying to do everything they can to actually stabilize the economy. Now, this is the best time to learn forex, because I'm talking about Africa and particularly Nigeria. It's the best time you make a lot of money, and when you convert it to so naira from dollar, just $1 is 1,500 naira. You could imagine that. Imagine making just 1,000 on what ordinary $100 you made over 100,000 naira. So what is traded is money. simply buying to the shares of a country. Okay, so and the price of the currency, like I said already, is a direct reflection of the health of the economy compared to other. What's the nomenclature? Looking at nomenclature and classification of currency and currency pair. Now, a currency pair made up of three letters. The first two represent the country, and then the last one represents the currency in question. Okay, taking for example, Euro USD. Okay, sorry, Euro USD is an exception. Let's look at USD. Sorry, this is supposed to be USD, not Euro USD. Mistake there. Okay, looking at USD, the first two letter there is US. US stands for United States. Then the last letter is D. D stands for dollar. Then you have like Nigeria, you have NGN. NG start for Nigeria, N start for Naira. You have, as an example, uh, New Zealand dollar. New Zealand, NZ stands for New Zealand, and then D stands for dollar. So, except for few exceptions, the first two letters of a currency is normally represented by three letters. The first two represent the country, and then the last letter represent the currency. Now, currencies are classified into minor and major, and the criteria for classifying them is the volume of transaction that takes place, and also the how large the economy is. So those countries that have the largest volume of transaction on a daily basis, and also they have very strong and viable economy, are called the major currency, and there are eight of them. You have the USD, otherwise called the buck. You have the euro, otherwise called the fiber. You have the yen, otherwise called the Japanese yen, otherwise called the yen. And then you have the Great Britain pound, otherwise called the cable. You have the Swissy, which is actually the Switzerland. Then you have the Aussie, which is the Australian dollar, the Loni, which is the Canadian dollar, and the Kiwi, which is the New Zealand dollar. Okay, now Australian dollar number 6678 are called commodity currencies. That is Australian dollar, Canadian dollar, and New Zealand dollar. And the reason why they are called the commodity currencies because they are influenced by commodity. Take for example, the Canadian dollar, the Loni, is influenced heavily by oil. So they are called commodity currency. So apart from these eight currency pair that are the major currency pair, every other currency, sorry, not pair now, currency rather, every other currency are minor currency. So we have the major and the minor currency. And like I said before, the classification is basically what is used is there are so many factors, but the major is the volume of transaction, and then the strength, how large rather the economy is. Now, currency pair. Currency pair, by currency pair, we mean that currency are not traded in isolation. When we talk about foreign exchange, we are trading one currency against the other. That means when you are buying a currency, you are selling. When you are selling a currency, you are buying the other. So currency are traded in pairs. So that's what we call currency pairs. And they are classified into three major categories. We have the major, the crosses / the minor, and the exotic. Now, the major currency pair are those currency pair that have USD as either the base or the quotes. Also, they are highly liquid. That means the ease at which they are converted to cash or the availability of cash. When something you say is liquid, you are saying that it can easily be converted to cash. When you say commodity or a security is liquid, it can easily be converted to cash. It can easily be sold and bought with ease. okay, quickly. So they are highly liquid. They are the largest or the biggest economy in the world, and then there are seven of them. These are that's major currency pair. Remember that this major currency pair have USD or the United States dollar as either the base or the quote. In our next lecture, I'm going to talk about terminology, and some of them will include what is a base, what is a quote. So we have Euro USD, you have USD yen, you have Pound USD, USD CAR, CHF, USD CHF, and then you have Odd USD, then you have NZ USD. These are the seven major pair, and most trading revolves around. In fact, uh, uh, when you dive into the world of foreign exchange or FS, you are advised to start with the major because they are highly liquid. You can place a trade in few minutes and be in profit if you are a scalper. You can place a trade in few hours, you are in profit. If you are an intraday, you can place a trade in 2 days, you are in profit if you are a swinger or you are a swing trader. So they are liquid, they are highly they are liquid, they have the largest, they are from the largest formed by the largest economy of the world. Then you have the minor or the crosses. Those that do not have USD as a base or the quotes, they are called the crosses. Okay, they are minor, okay, also called the minor. I just want to stop there. Now we have 3 or 4 category of crosses. You have the euro crosses, the yen crosses, the pound crosses, and other crosses like the odd and the New Zealand dollar crosses. Now basically the crosses are other pairs that do not, apart from the pair from the major and sorry the emerging and developing country, they are pairs that do not have USD as either the base or the quotes. So you have example like euro yen. Okay, let me give example here. Example like, for example, you have euro yen or euro Japanese yen. You have example like CSFJPY. You have example like Great Britain, pounds, yen. So these are crosses, okay? So then the next you have the exotic. The exotic pairs are those pairs that have a major pair. They have a major pair. That means the they have uh a major currency and any other. This should be a major currency, okay, sorry, and any other emerging or developing economy, like emerging economy like Turkey, Brazil, developing economy like Nigeria, Sierra Leone. When you have one major, it could be any of the major that I listed before now. If you combine them with any other economy that is emerging, that is not a major economy, is emerging or developing. Apart from the major economy, every economy is regarded as emerging or developing. So when you combine one major and developing or emerging economy, you have what we call exotic. They are very expensive, very expensive. Okay, they are volatile. They can move a let me use the word a distance within a very short time. Okay, are very volatile, unpredictable. They are not often traded. In fact, most time they are traded when they are taken advantage of during situation that will be profitable for certain people, or just because they are. For example, if you want to travel to Russia to to school, you will need their currency. You have to exchange your USD thereabout for their ruble. Or you're going to South Africa, the rand, you want to live there, you have to buy the USD or before now and then exchange for their rand. So they are not often traded. You will see wide forex trading. Why some pairs are traded basically. may not be speculative. But okay, let's leave that. So they're volatile, they're not full traded, they have high spread. This is another term that we're going to define. What does it mean? What does high spread mean? Okay. Then they are sensitive for geopolitical events, like when the Ukraine and the Russia war started. The Russia currency was just falling and falling and falling. It was just fluctuating because they are subject. US can go to war with other country. You have little or no effect on their currency because of the stability. So, but unlike this developing, if anything should happen in Nigeria or any of this African country or develop, also emerging economy like Turkey, when there was attempted coup, you see their currency fluctuate. They are very sensitive to geopolitical events. So that's that. Now, what is forex trading? Okay, what is forex trading? Forex trading, what we have defined so far is forex. Now we're looking at forex trading. Forex trading is a simultaneous buying of one currency and selling of the other through a forex broker. Simple. We're buying a currency pair, one currency pair, and selling. Like we said, you can't do forex without doing both at the same time. Whenever you are buying, when you buy a particular currency, you are selling. When you sell a particular currency, you are selling. You are buying another. So forex trading simply means buying of one currency pair and selling of another through a forex broker. Now, these are done in pairs and highlighted above. Okay, and most of the trading of forex, they go through that's over the counter. That means there is no central location, no physical location. It's all through interbank markets. There's no particular place where they have the volume of international transaction. There's no central location where all the traders are meeting and this where they trade for buy or sell dollar. Rather, it is over the counter, and then it is via the intermarket, interbank, between banks basically. So, but importantly, the United States dollar is regarded as the king of the market, and so most of the transactions that take place are a reflection of the fact that the USD controls the market. Any little thing, any little decision, it affects. In fact, like the NFP, which is a very major fundamental news event that takes place the first Friday of every month. Even currencies that do not have relationship with the US dollar are affected slightly depending on the level of correlation. So the reason for this are as follow. Why USD is the king of the market? Number one is it makes up 84.9% of transactions that takes place. 84%, one single currency. Number two, most of the foreign reserve of different country, it makes up 62%. Of course, other major current foreign reserve include the euro, the yen, but dollar takes up 62% of the foreign reserve. Like in Nigeria, I think we are talking about $34 billion foreign reserve. And it has a way of affecting. The more we save, the better for us. So we have a foreign reserve of $34 billion, and then we have maybe a little of yuan and then what have you. But our major foreign reserve, if not close to maybe 90%, is for Nigeria. Is over is a USD. So number three, it is the largest economy. It is still the largest economy, even though China is trying to become a competitor. But see, the United States of America economy is still the largest. It has one of the most stable political system. It's the only country in the world that has they've never been war. If I'm right, they've never been war. No country has attacked US. No country, not individual, has attacked US in their soil, but they have attacked several other countries. So their system, the political system, the political structure, democracy is stable, have been running for time immemorial, and then the military, they have one of these. If actually they are still the sole super military power, and then most of the international loans and bonds are are done in dollar. And then you know, Brazil, Russia, and India, and maybe Russia, India, and China in particular. They're trying to undermine the power of the USD. They form BRICS and so many things they're trying to do, especially Russia, because of the war that's going between Russia and Ukraine now. But still, hold habits. We've been used to the dollar, even if there are strong economic reasons for us to use the other ruble, the rupee, and all that. People don't have so much confidence in this other currency as much as they have. So cross-border transaction between one country and the other, you find out that it is the dollar that people prefer and they have confidence in. So what are the functions of the FS market, the forex market? Number one, transfer of funds from one currency pair of a country to another. You want to go to study in another country, through you got to when you get to the border, or before you get to the border, you buy the particular currency of that particular country you want to travel to, and then you change over. So it's a means of transfer of funds. So you move your phone. For example, I'm a Nigerian, I want to travel to US or any other country for that matter. I'm going to transfer my money from naira to dollar. So it is the forex market that provides this medium for me to transfer funds from one currency pair to another. Number two, provide short-term credit finance trade between countries. I want to import certain goods from China or from US, from Germany. It is forex market that does that, enables me to carry out the transaction. Then it provide edge. I explain that certain multinational, in fact all multinationals, at the beginning of the year, they make projections and they study the market to know the direction of the market, and so they want to hedge against losses. Imagine if they invested in a country and the quality or the health of that country, or the projection is that they will be falling. So they will buy another currency to hedge against the losses that have been incurred for market forces. So one of the things that you do in forex market is hedging. Okay, that's what we are doing at the moment in Nigeria. Okay, most of us knew, or it was easy to predict, that the naira is falling. So instead of inflation eating up your money, some people decide to buy dollar. So they edge. That's what they are doing. They're edging again, so that eventually when the naira begin to bounce back, they can return their money back to naira. So that's edging. Now, speculation simply means buying and selling of currency based on short-term price movement. You're not interested in holding. In speculation, our primary motive is not. That's what we do when we say forex trader. If you are asked anywhere, what do? You are filling a form. What is your primary our primary reason for trading forex? Speculation. You are not holding. No, you see, over the computer, the electronic means we buy and sell dollars, or buy and sell, sorry, foreign, currency. We trade currency. Now, we don't hold this physical currency. We speculate that dollar will rise, dollar will fall, without particularly holding the currency. That is speculation. Buying and selling of currency based on short-term price movements. Okay, now forms of this we are going to earn forms of forex trading. You have two major forms. We have they are categorized based on whether they are retail or individual trader, and institutional instruments or institutional traders. Now, for the individual traders, we have four categories. We have the futures, option, the ETF, spot FS. Spot FS, we have, that's where we are. Just in case your asked, what category of forex trading are you intend to do? Just is spot FS, particularly retail forex. Yeah, you also have CFD, spread betting, and all that. Then for the institutional instrument, we have FS swap and forward. These are cannot be done by individual. They are done by banks, big banks. Now, for futures is actually the new direction of the forex. Like I said when I was giving live presentation, that forex is moving from retail forex to futures. You can check online to look at what definition of futures I've iterated the platform like Sierra or Forex, and a lot of traders are moving. Very good traders are moving to futures, options. Okay, you have ETF. Basically, if you are following the story of Bitcoin, there are three: BlackRock and some other company recently just were licensed to provide ETF on Bitcoin and also Ethereum. They've not approved Ethereum, but they've approved Bitcoin. What it means is this: in ETF, you are basically buying. You're not buying Bitcoin. If you are a trader, for example, cryptocurrency trader, you buy Bitcoin, you sell USDT and all that. But in ETF, the company invest into Bitcoin. For example, let's look at the ETF Bitcoin, which is currently licensed by BlackRock. They buy into, or what's it called, into the market. They trade themselves in Bitcoin. Then you buy like a share. ETF is like buying a share into an hedge fund, and a hedge fund that does trading. You buy, so when they make profit, you make profit. When they make loss, also you also make loss. So this is a brief introduction. In my next lecture, I'm looking at terms and definitions of in Forest, and then after I will look at practical usage of the MetaTrader, and then we will try and do practical session on how to take trade, so that even if you've not learned so much, you can be practicing alongside instead of waiting for weeks and months to complete the basic training before we go into intermediate and advanced strategy. Thank you very much for your time.